Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about how I made a little over $600 in the past week from swing trading. We're going to be just looking at one stock that made me 600. We're actually up a little over 1,500 in the past week. So I hope you guys all enjoyed this video. If you guys do, hit that like button, subscribe, and if you guys want to learn how to swing trade, these strategies, how to find stocks, the approach, the mindset, everything. It's a one-stop shop for all of your swing trading needs. So check out the Swing Trading Masterclass. It's our school, it's our course, it's my prized possession. I absolutely love it. I don't believe in getting rich quick. I don't believe in alerts. I teach you how to find stocks. I teach you strategies so you can become a successful and full-time trader. So check it out down below, and you guys can use code LIONS, like the Detroit Lions, for 47% off. They just won the past game 47-9, so I want to do a crazy sale. Check it out down below. You won't regret it. And guys, let's jump into this here. So, all right, so this past week here, we're in on 3 positions, which has been really, really nice. So our P&L right now is near and around $1,557, and the stock I want to show you guys here is our highest gainer, and that's ticker symbol DX. This is actually one that we talked about in the group, and this is made us $666, and we're up a little over 4.5%. I know a lot of traders hate to look at these P&Ls, right? They think, oh, in order to be a successful trader, you need to have a 30% return. No. What makes up a successful trader is taking those 1, 2, 3% returns, those small gains that maybe you're unsure about. Maybe you're in on a position and you don't know if you should buy or buy more, sell, whatever. I just take profit. I've done my job. And I think that's what separates a lot of good traders from bad traders, is just being able to take profit. I've never lost money taking profit. So when I'm up and I'm happy, I'm confident, maybe I'll hold it a little longer. But when I'm up and I'm a little, oh man, I don't know, if I don't like how it's doing this, I don't like how it's doing that, I'll just take my profit. I have no issues doing that. So let's talk about the strategy here. So this right here is the stock, ticker symbol DX here. Our average cost is about $12.06, which is pretty good here. So let's look at it. So before I ever place a trade here, you guys will notice on our trading journal, I have a trading checklist. So before I ever place a trade, I make sure that this is like my bread and butter. So first thing is an upward trend, support. We want an undervalued RSI. We want to know the earnings. We want a good risk and reward. We want some sort of lower time frame support here. So now looking at this, you guys will notice that this follows it to a T. Stock on an upward trend, sold off down to a support line. So this one here had 2 supports, which anytime you have several supports, that's just higher indication of getting buying pressure. So you guys can see right where it hits it once, twice, 3 times, establishing support. Normally we want a minimum of 3 touches. Hits it again, 4, hits it again, 5, and we've gotten buying pressure every single time there. So establishing good support. We also had, let's remove these so we can see these other indicators here. So these right here are what we call moving average lines. They act as support resistance. So in an ideal situation, you can see how strong they act. You want to buy when the stock obviously hits it. And so that could be an undervalued point. So that checks off 2 boxes. We have an upward trend. We have support. The next one here is the RSI. The RSI was at a 36. In an ideal situation, we want it under a 35. But more importantly, what you want to do is look back at previous history, because history tends to repeat itself. So looking back, the last time it was at a 36 was back in here, where we had a good move here, previous to that, in here. So now looking at it, we have everything. We have an upward trend, stock on a support line, undervalued RSI. So let's just continue to evaluate. And as a trader, you need to do this. You need to understand this here. So you want to understand the earnings. You never want to trade through an earnings. It's very, very risky to do so. And the earnings is actually in about 10 days. So I know we're in the clear on that one. So now the next thing here is risk and reward. You could have the best stock, you could have the best entry, But if you don't have a good risk and reward, you're going to lose money over the course of the long run. So entering on that 90-day moving average lines, setting our stop just below it, about 2% is kind of the ideal situation. Setting our target price up here. Our risk and reward is about 6.69. So what that means is for every dollar I trade with, I'm hoping to make about $6.69. So with this type of setup and trade, I could be wrong 5 times and still make money. That's why having good risk management is so incredibly important. Risk management isn't about making money, it's preserving your cash and understanding your profit, your stop, your entry. All of that stuff is very, very important. You never want to just buy random stock at a random price. You want to know exactly where you're buying and why you're buying. So let's talk about why we bought it. So the last thing here is finding some sort of breakout or some sort of support here on a lower time frame. And that's exactly here what we saw. At the time of purchase, the stock was forming this. You guys can see where it was just selling off like crazy. You know, it hit this general hourly trend line. We got in on the breakout of this. The second this stock broke out, we were in. We got in, setting our stops just below the lowest wick down here. So it was pretty much below about $12. So I would move it down about 10 cents. So we can say $11.90 was our stop. And the stock has been rallying up on this trend line ever since. So now looking at this position, what do? Well, we're doing a trailing stop loss. And so I think the best approach is literally to go back to the daily and set your stop loss below the previous day's lowest wick. So for tomorrow, our stop is going to be near and around the 1242 mark. So if it dips down, we take our profit and we move on to other opportunity. Doing that really helps you catch stocks that squeeze up very, very, very fast. It will help you catch runners, but it will also give you a defense where if the stock gets some selling pressure, then you'll just get out, right? As a trader, you need to understand everything. You need to understand your stops, your buys, all that. So having something like this, understanding where your stop is very, very important. So guys, I hope you guys all enjoyed this video. If you guys did, hit that like button, subscribe, and don't forget, if you want to learn more about swing trading, how to find undervalued stocks that we talked about today, check out our school. You won't regret it. We have private live streams, quizzes, a group chat, lectures, everything you guys need. I highly recommend it. It's not a get rich quick. It's nothing like that. It's an 8-week course where I literally break it down with you on how to become a trader. So check it out down below. I'll see you guys in there, and you guys can use code LIONS, like the Detroit Lions, for 47% off. So guys, I hope you guys all enjoyed it. Like, subscribe, and we'll see you guys in the next one. Take care.